Bitcoin ETFs explained, the gateway to Wall Street and massive adoption. Bitcoin ETFs are here and they are changing the entire crypto landscape. But what exactly is a Bitcoin ETF? Why did Wall Street giants like BlackRock, Grayscale, and Fidelity jump in? And how does this affect you as a retail investor? Bitcoin just got Wall Street's blessing, but what does that mean for you? What is an ETF? ETF stands for Exchange Traded Fund. It's a fund that holds a basket of assets like stocks, bonds, commodities, and it's traded on traditional stock exchanges. Think of it as a way to invest in something without directly buying it. What is a Bitcoin ETF? A Bitcoin ETF allows you to gain exposure to Bitcoin's price without owning the actual coins. You don't need to deal with crypto wallets, exchanges, or private keys. It trades on platforms like the New York Stock Exchange, just like Apple or Tesla stocks. Types of Bitcoin ETFs. Spot Bitcoin ETF. Directly holds actual Bitcoin. Price matches real-time market value. Considered more secure and accurate. Futures Bitcoin ETF. Holds contracts that bet on the future price of Bitcoin. More volatile, sometimes disconnected from Bitcoin's current price. Example, ProShares Bitcoin Strategy ETF, BITO. Why the SEC delayed ETF approval? The US SEC, Securities and Exchange Commission, rejected spot ETF applications for over a decade. Key concerns: market manipulation risk, lack of surveillance sharing agreements, no regulation of crypto exchanges. In 2023 to 2024, lawsuits like Grayscale and SEC increased institutional pressure, forced a policy shift. The 2024 Bitcoin ETF Boom. January 2024, SEC approves 11 spot Bitcoin ETFs with big names as follows: BlackRock iShares Bitcoin Trusts, IBITs, Grayscale Bitcoin Trusts, converted to ETF, ARK21 Shares Bitcoin ETF, Fidelity Wise Origin Bitcoin Fund. Over 15 billion US dollars flowed in within the first few weeks. The results: Bitcoin price surged past 60,000 US dollars due to institutional demand. How ETFs work for you. The advantage: no crypto knowledge needed. Can invest via retirement accounts, 401k, or the IRA. Liquidity, security, and regulations. The disadvantage: you don't actually own the Bitcoin. No access to private keys. Not your keys, not your coin. ETFs can have management fees. Impact on Bitcoin and crypto markets. ETFs bring legitimacy and mainstream adoption, encourages banks and institutions to enter crypto. It could trigger supply shock. ETFs must buy real Bitcoin to back shares. Long term, could push Bitcoin closer to $100,000 plus as demand outpaces supply. It has even crossed much more in recent times. Risk to watch. ETFs centralize a decentralized assets. Conflicts with Bitcoin's purpose. Government regulation and taxation. Investors may get exposure without understanding Bitcoin fundamentals. Possibility of ETFs holding more control over Bitcoin than individuals. Should you buy a Bitcoin ETF? Ideal for traditional investors who want Bitcoin exposure. People who prefer not to handle digital wallets. But serious Bitcoiners still recommend holding real BTC in cold storage. In conclusion, Bitcoin ETFs are more than just a new investment tool. They represent the merging of old finance and new technology. Whether you buy the ETF or hold the coin yourself, one thing is clear. Bitcoin is no longer just a fringe asset. It's going mainstream. Are you ready for this change? Remember to like, comment, share, and subscribe. I'll see you on the next one.